Hello everyone. If you want to learn more about the Retirement Savers Credit, or just the Savers Credit as it is known, then you've come to the right place. The Retirement Savers Credit is one of the best credits, one of my favorite personal credits, that you can take because it can save you a ton of money while also building your wealth significantly. If that sounds good to you, then definitely stay tuned because today in this video we are going to talk about the who, what, when, where, why, and how much. Pretty much everything that you could possibly need to know about the Savers Tax Credit. But first, let me go ahead and say what a tax credit is first, just so we're all on the same page. So a tax credit actually reduces your tax bill dollar for dollar. So let's say you have a $1,000 tax credit and you have a $2,000 tax bill. Well, that tax credit eliminates $1,000 of it, so your tax bill only becomes $1,000. So tax credits are incredibly powerful. It can save you a ton of money, and the Savers Credit is definitely one of my favorite ones. And after this video, I think it's definitely going to be one of your favorite tax credits as well. First, let's begin with who can claim the Savers Credit. And the requirements for it are very, very simple. The first is that you have to be at least 18 years old. The second is you can't be a full-time college student because there are other tax credits that you will qualify for. The third is that you can't be a dependent on someone else's tax return. So for the purposes, when you file your tax return, you have to be independent, basically. And of course, you have to contribute to a qualified account, which we'll talk about later. So that is pretty much who can qualify for this tax credit. So almost everyone can qualify for this tax credit. Granted, they actually contribute to a qualified account, and their income is within the limits. And we'll talk about that shortly. Next, let's talk about where you're actually going to file this credit. So let me bring up the form really quick on the screen for you. And as you can see, the form where you'll claim the credit is actually called Form 8880, okay? And it's called the Credit for Qualified Retirement Savings Contribution. So you would fill out this form. It gives you all the instructions. It's pretty simple on how to fill it out. Well, it's simple in theory, really. It's kind of complicated. But you would fill out that form, and that is how you would claim the credit. But if you're using a tax filing software, it'll pretty much do all of this for you. No need to actually fill out the paper version. So it's all taken care of for you in pretty much all the tax softwares. Now let's talk about what this tax credit is for. Well, it's for qualified retirement contributions. And there are many different retirement accounts. There are many different accounts that qualify for this tax credit. And I'm going to try to list off a few of them, but I'm going to save it for the end of the video. So basically, if you meet all the other requirements and you make a contribution to a qualified retirement account, then you'll be eligible for this credit. But before we get on to that, let's talk about why this tax credit even exists. And really the primary reason on why the Retirement Savers Credit, or just the Savers Credit, exists is because it incentivizes people to save for their retirement. As you may know, a lot of people in the United States are very terrible at saving for their retirement, and they mostly spend most of their income. So this tax credit is kind of put in place as an incentive for you to save more of your money for retirement. And it does so by reducing your taxable income. And it's geared more towards low to moderate income individuals and families. So that's usually who is going to actually qualify for this tax credit in the first place. The IRS and the government in general creates all kinds of different incentives to get you to do certain things, and save for your retirement is one of them. Now let's get on to the most important thing, and probably the primary reason why you are researching this, and actually the primary reason why I learned about it in the first place, and that is how much this credit is worth. How much can it save you on your taxes? But really quickly, before we get into that, let me just say, if you're enjoying this video, I'd really appreciate it. Just give me a thumbs up and like this video really quickly. It really helps me out, and again, I do appreciate it. And consider subscribing to the channel, because every single week on Tuesdays and Fridays at 3 p.m. Pacific Standard Time, I am putting out new videos on personal finance, taxes, saving money, investing, and everything like that. And I know that I can help you out with something. I know that I'm going to put out some good information for you. And if you have any kind of questions about anything, please feel free to leave them in a comment below, and I will do my best to answer them. So that is really all about what On Cash Flow is about. It is personal finances, mastering your cash flow for pretty much anyone. So consider liking and subscribing. I'd really appreciate that. Now let's get into how much. Well, the maximum amount that you can receive from the Retirement Savers Credit is $2,000 if you are single, and then $4,000 if you are married filing jointly. So that is actually a very significant amount, if you can get the maximum amount. That's because, if you're married and you're filing jointly, a couple, then $4,000 off of your taxes, that's a lot of money savings. That's $4,000 worth of savings because this is a tax credit. And so, if you had a $4,000 tax bill and then you qualified for this $4,000 credit, boom, your net taxes that you paid that year is going to be $0. And it's very possible if you're on a moderate income and you're saving a lot of your money and to build your wealth, which is what OnCashflow is all about. So I really enjoy things like that. So let me real quick put up a screen for you. Very important when it comes to retirement savers credit. Let me put up this chart. So on here you can see for the 2020 savers credit, and this gets adjusted pretty much annually, for the incomes and things like that. You have a percentage of your contribution on the left, and then you have your different filing statuses, and in between them it shows you like different income amounts. So for example, if you are married filing jointly and you had an adjusted gross income of $50,000, then you would fall into the 10% of your contribution category. So 10% of whatever you contributed to your retirement is the amount of your credit you're going to be eligible for. Whereas if you look at the very top one, adjusted gross income not more than $39,000, let's say you're married filing jointly and you contributed money to your retirement account, but your actual adjusted gross income was only $30,000, well, then it's actually 50% of your contribution. So in order to get the maximum of $4,000 in that case, you would actually have to have contributed $8,000 to your retirement account or to some kind of qualified account. And then 50% of that would be your credit, which is $4,000 in this case. So, if you're making that amount of money and you contributed that amount to your retirement account, odds are you're probably not paying any money in federal income taxes that year. So the retirement savers credit can be quite powerful, for those lower to moderate income. I personally try to take advantage of this credit every single year if I can, and I think that you should definitely do the same. And it's really awesome because this one actually incentivizes, building your wealth, which is something that I love doing. So you're actually contributing to your accounts, you're investing, and you're getting rewarded for that. You're paying less taxes because you're investing. So in a lot of cases, you can invest some of your money and then get money back on your taxes, sometimes a significant amount. And therefore, it's as if you invested less, and it saves you a ton of money because instead of paying money to the federal government, you get to keep that money in the form of a tax refund or something like that. But I do want you to keep in mind that with the retirement savers credit, it is a non-refundable credit. And that means if it reduces your tax bill below $0, you're not going to get refunded any difference. You just won't pay any income taxes that year. So if you had any income taxes withheld, like from your paychecks or anything like that, then you will get all of that money back if your tax bill, like your net tax bill, is $0 at the end of the year or less than $0 because of this tax credit. So it's non-refundable. You can't actually get paid money from the savers credit, but it's still a very wonderful tax credit. And now let me just glance at my list really quick, because there are many different accounts that you can contribute to that will qualify for this tax credit. And just to name a few really quick, you have your IRAs, which is your individual retirement accounts. Both traditional and Roth qualify. You have a 401k, both traditional and Roth will qualify. You have your simple IRAs, for your self-employed, your SEP IRAs and things like that, all the different like solo 401k, all those different self-employed options, those will qualify, both traditional and Roth. 457B, 403B, usually if you work for a government agency or something like that, those accounts also qualify. There are a few others, but those are the primary accounts that do qualify for this. So if you meet the income requirements and you contribute money to one of those qualified accounts, odds are that you can qualify for this tax credit. And you should definitely try to maximize this tax credit if at all possible. Let's go through one more example. So I'll put up the chart real quick while I'm going through this example so you can follow along with me. Let's say that we have a single person. They would fall into the all other filers. Let's say that this single person made $30,000 in this given tax year in 2020, but they actually contributed $11,000 to their retirement accounts. They're a super saver. In their 401k and in their IRA combined, they contributed $11,000. Well, that would bring their gross income of $30,000, and they would subtract $11,000 from that, and that would be $19,000 of adjusted gross income. And if you can see on that chart, it'll bring them into the 50% of your contribution because their adjusted gross income is not more than $19,500. It is $19,000, which is in that range. And so 50% of their contribution is eligible. Well, 50% of their contribution of $11,000 is $5,500. So by the math, you would get a $5,500 credit. But as we have learned, the maximum credit for the Savers credit is $2,000 if you are single. And so in that case, they would just get the $2,000 tax credit. So that's something that is really important that you need to keep in mind when trying to calculate how much your tax credit could be. And this can be really cool for different things like tax planning and retirement contribution planning, planning how much you're going to actually contribute and how much it's going to be worth in a tax credit for your individual situation. And if you're watching this video, I can bet that you are a doer and you are a learner. Saving money on your taxes can be one of the best ways to achieve financial independence. And I actually created a really good video on financial independence. And if you don't know what financial independence is, just really quickly summing it up, it is gaining enough wealth to where you no longer will have to require work income in order to support yourself. So it is the ultimate form of financial security. And everyone should try to get to financial independence at one point in their life, because financial independence is also known as something later on down the line, retirement. Financial independence can be achieved at any time. You don't have to be, in your late 60s in order to achieve financial independence. And I created this really good resource, a really good video. It's a little bit longer, but it's jam-packed full of really good information and step-by-step details on how anyone can achieve financial independence. And I outline a way to do it in 10 years or less. Whether you want to do it in 10 years or less or a little bit more is irrelevant. The steps are still the same. So if you have any kind of interest in achieving financial independence or just gaining wealth, saving money on your taxes, saving money in general, and investing, I highly recommend that you watch that video. It is a really good resource. If you're interested in that video, go ahead and click the link in the description below, or I'll also put it in a comment below, or possibly it's going to be coming up right next to me where I'm pointing. So definitely check out that video if any of that sounds interesting to you. And if you like this video, do me one quick favor and hit that like button and consider subscribing to the channel, because I'm putting out new information on personal finance every single week, Tuesdays and Fridays at 3 p.m. Pacific Standard Time as of right now. Thank you so much for watching. I'm Zach from OnCashflow.com, and I hope to see you next time.